The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Welcome to today's webinar, Expert Financial Advice to Address Challenges, Seize Opportunities, and Manage Cash Flow in the COVID-19 Era. Before we begin, I wanted to let you know that your lines are muted, but we definitely welcome questions. So please type them into the Q&A box and we will answer them at the end. This session is also being recorded and you will receive a copy of the recording and the slide deck via email later today. Joining us today are James Graham and Maileen Flores from Richter Financial Studio. James is the CEO of Richter Financial Studio, a CPA firm specializing in the provision of leading-edge, cloud-based accounting and virtual CFO services. James has helped guide hundreds of rapid growth, innovation-based businesses, as well as an entrepreneur and investor. He initially worked in public accounting as an auditor, where he led audit fieldwork on Fortune 500 engagements. Our second presenter today is Maileen, who is a partner of Richter Financial Studio and is a licensed CPA in both California and Colorado. Through her work as a fractional CFO and accounting expert, she helps emerging growth tech and life science companies better position for capital and prepare for due diligence. James and Maileen, if you're ready, I'll hand it on over to you guys.
All right. Well, thanks. Appreciate that. So yeah, I'm glad to be with everyone here, and I hope just to get started, I hope recognizing it's really challenging times to truly hope everyone's doing as well as possible given your unique challenges that you're facing or that your business may be facing. And while recognizing that everyone's situation is different, over the next 30 to 40 minutes, Maileen and I are going to present a whole bunch of different ideas and strategies for you to consider and reference as you look to basically address challenges you and your business might be facing, seizing opportunities that will allow you to keep pushing forward, and also to look to how you can manage cash flow. It's such a, it's referred to as the lifeblood of a business, but it also, you can really realize how true that is when cash is scarce at times. And in a sense, yeah, recognizing, everyone's situation is different. Again, it's just, we're going to provide a lot of different takeaways, and you can also be able to reference back to our presentation. We're going to be sharing a slide deck afterwards, so you don't have to worry about capturing all these notes. And I think I'm pretty sure video will be available, but I'm not positive. Last kind of framing note here is that we're going to be rolling through a lot of different material. We'll leave time at the end, but encourage you to ask questions at the end. A lot of the information we're going to review has a lot of complications to it. We'll do our best to answer your questions. And the so related to who we are, basically we have a team of 15 plus. We're located Colorado as well as California and San Diego, San Francisco. And our team of 15 plus basically works with a lot of different companies to optimize the growth as well as to help companies face their adversity and challenges head on. So our team has experience dealing with the dot-com recession of 2001 when the tech bubble popped, as well as the Great Recession in 2008, 9, and 10, as well as a lot of other contexts. A lot of them actually for the better. That's what we really like to do, is help companies plan to move forward and be successful. That said, one quick disclaimer is that there's a lot of information floating, and it's constantly changing. We're gonna do the best to provide you really solid information, but have to put a disclaimer in that you definitely want to check the information relative to your own situation if you're planning to use this information. So let's see, getting as we look to kind of start at a top level, in terms of where the business environment is right now, you really are looking to think, okay, how do we move forward and take actionable approaches in terms of dealing with the situation? As you know, it's a time, there's a lot of, very real health, economic concerns. There's also extreme challenges and rapid change that can be very disorienting. And perhaps most of all, it's a time of great uncertainty. It's a time, it's times like these where we truly need to adapt rapidly without looking back. And a great example of that comes to mind is, I don't know if, some of you may have heard the story of, Marcus Luttrell and basically his SEAL team, as told in the movie and the book Lone Survivor. But basically, he was put into this extreme situation in the mountains of Afghanistan. And so I won't spoil the whole story to you, but in this sense, it's a 3-week epic survival story. It basically just shows how the combination of his incredible focus, his combined with his skills, his determination, and his perseverance allowed him to get through in a way that very few could. And he basically lived by a motto. It basically is, I'm never out of the fight. And you may not be fighting for your life against all odds on a mountain in Afghanistan, but you are dealing with a lot of challenging situations in your own situation, and it basically requires a lot of leadership. If you can move the slide. So the next, in the next section, Maileen is going to be presenting some information a little bit more specifically about some of the new and emerging opportunities that are available.
Yeah, right now it's a really critical time for all of us as individuals and all of our businesses, whether you're here in the US or internationally, maybe in Canada or overseas. There's a lot of opportunities that are out there to help support businesses with COVID relief programs. And so it's really important to understand what your options are because this will help your company sustain and it also creates an extension of different cash flows. A lot of the information I'm going to go through is US related, but I think the key thing to remember is no matter where you are, whether it's your larger federal government or maybe at your local jurisdiction, is to seek out what opportunities you have. So the first one I'm going to talk a bit about is at the end of March, the government came out with what's called the Payroll Protection Program. So I'll go through a bit about the eligibility. This loan is something that you apply with through your bank, and it can be 100% forgivable as long as the funds are used in the 8 weeks after you receive the funding on certain expenses. So I'll go through how to get forgiveness in a bit. But the gist of it is the loan amount that you get is based off of your payroll for your average payroll for the last 12 months or a 12-month period, and you take that amount times 2.5 to get your loan amount. And so if for some reason you don't use all of the funds from this loan for these specified expenses, the loan can be extended for 2 years at 1%. And for the first 6 months, payments are deferred. And then a really unique thing about this loan offered by SBA is there's no personal guarantee, which is unique because usually you do have to guarantee loans with the SBA. Now, over the last, I'd say 3-4 weeks, there have been a lot of rapid developments, and I hope Treasury is done with their guidance. But you know, it's been moving so rapidly that we've been keeping up daily to see what's new about this program. So some updates. Round 1 of this program actually exhausted funds around April 15th. And so thousands and thousands of businesses applied and didn't get that far into funding. And so the government released a second round of funding, and that just opened up yesterday. And so banks started processing loans again with SBA. Now, what happened in the first round was we noticed from our experience and our observation that a lot of the big banks dropped the ball, and they weren't able to process a lot of the loans for different reasons. So we've seen class action lawsuits come out. We have seen a lot more success with local regional banks. So if you have a local credit union and you weren't successful in the first round and you were with one of the larger banks, I think it's a good idea to really look at this other opportunity of applying with a smaller bank, because these smaller banks, their funding rates were a lot higher because of the volume that they had to deal with. So again, funding for round 2 just started again yesterday. So you need to move quickly if you haven't already taken advantage of this program, or if maybe your loan is in with one of the larger banks, I would definitely look at one of the smaller banks and move quickly. My sense is there might be a round 3. I haven't seen anything official on that, but there is a lot of need out there. And I'm hoping at least that there will be another round of funding for those businesses who don't make it to round 2, because I imagine that this week, round 2 will probably be exhausted that quickly. Now, as far as forgiveness, the companies who have received their funding, you're now in this 8-week period where you need to track your expenses and ensure that the loan that you receive, that up to 75% of that is used for actual payroll costs. And then, or at least 75%, I should say. And then up to 25% can be used for other expenses like interest on mortgages or rent or utilities. And if you cover those bases along with other aspects like keeping your employment levels the same, you likely will be able to request that this loan be forgiven. Forgiveness is, the request is right now what we think is it's going to be sent to your bank, and you're going to send in documents supporting all of the expenses in your 8-week period, and you're certifying that these are correct. And then the lenders will have about 60 days to process your request for forgiveness. And I mentioned too that your employment levels and salary levels that you originally reported need to stay at the same level to receive that forgiveness. But if for some reason you have to decrease amounts, the amount of forgiveness will be prorated. Now, there's still guidance coming out, and so I would, if you have your funding, I would keep in close contact with your bank on requirements, but also checking Treasury guidance out there as they start to release more information on actually how to get your loan forgiven. Another program that is out there through the SBA is the Economic Injury Disaster Loan. So this loan is something you apply for directly with SBA. You go to their website. Now, last week when I last checked, this loan was exhausted and you couldn't apply. So I think with the new round of funding that came out, I would check back on their site to see if they reopened the gates so you can apply for this loan. This is another type of financial hardship loan. In the past, SBA had disaster loans that were really for property damage, but they recognize that as we are in this COVID environment, a lot of the losses that are experienced are really economic, and they have to do with having issues covering working capital. So these new economic injury disaster loans are meant to help with working capital. They're up to $2 million. It can be a 30-year term. Interest rates for businesses are 3.75%. And then there was this really neat aspect attached to this where they were doing these emergency advances. Originally it was 10K. And so we did actually see some companies who got the full 10K, but in the last few weeks, they changed it to 1K per employee up to 10,000. So if you have 10 employees, you'll get the full 10K. But if you have less than that, it's a prorated amount. It's a 1K per employee. This is just a nice little comparison chart. And so we will be sharing our slides with everyone in attendance today so that you can reference back to this and see, the differences. One thing I do want to point out is the repayment for the economic injury disaster loan. It's required for the loan itself, but the $10,000 is not required. You don't have to repay that money. And then also, in addition, SBA, they have a lot of loan options. And so I've included this really great comparison chart so you can look through all your options. It gives you a nice summary of the different interest rates. They have still their original programs, but then it also includes a couple of the new programs specifically related to COVID. And in addition, you may not have heard of these other programs as much in the news, but the Fed has come up with what they call the Main Street Lending Program. And so there's two parts to this program. There is the Main Street No Loan Facility, and then also the Main Street Expanded Loan Facility. So one is for new loans, and then another one is if you have an existing SBA loan, you can actually upsize your loan to a larger amount. These are for a little bit larger companies, but there's still limits. Less than 10,000 employees, less than $2.5 billion in revenues in 2019 are the qualifications. But the loan amounts do start at a larger amount. They start at $1 million. And the rates on this are based off of SOFR, but roughly it's 2.5 to 4%. So it's an adjustable type rate. One thing to note for this loan, though, is you can't use it for debt consolidation. It's really meant as another program for companies to help retain employment. And so a lot of the relief programs for businesses that I've seen are really geared for retaining employment and helping companies still provide payment so that their employees can have capital for themselves to keep the economy going. In addition, there's a couple other programs related specifically to paid sick leave and payroll. And so one of them is called the Families First Coronavirus Response Act. It's also known as FFCRA, but this period for this program is between April 1st through the end of 2020. And essentially there's two parts to this program. So there's one bucket of employees who can use it because they are sick, quarantined, or isolated. It's up to 80 hours for these first 2 weeks, and they actually you can pay your employees 100%, but the key is you're going to get a credit from the government for the 100% of wages that you paid for up to 80 hours. In the same bucket for the 80 hours, if you have someone who's caring for someone because it's maybe your child's school or daycare is closed, or they're caring for someone who has COVID, they can actually, you can pay them 100% of their wages, but essentially your company will get 67% credit back for paying these wages. And these credits are taken on your quarterly payroll tax return. And then in addition to that, there is what they call the expanded family medical leave credit. And so this extends the first 2 weeks for if you're caring for someone to 12 weeks. So it's an additional 10 weeks. And the credit that the company gets is 67% of wages paid because someone is caring for a child or another individual. So it's a really neat program. So in addition to that, there is also the IRS employee retention credit. And this is another payroll tax that you take on your quarterly tax returns. But essentially, it's 50% of qualifying wages up to $10K per employee per quarter. And so it's a pretty significant amount, and it's for businesses also impacted by COVID. I put a link here because there's different requirements. So when you get the slides, you can go to this page and you can click on the link to read more about requirements and how to claim this. But essentially, something to keep in mind is if you do get the PPP loan in that 8-week period, you can't claim this credit, but you can claim this credit in a different quarter. So keep in mind, this is between March 12th and January 1st of 2021. And so you can actually see how you can use these different programs in combination with each other and just make sure that you don't overlap the credits. But the key is the government is trying to find ways for companies to retain employment through the end of the year as they're dealing with COVID. And I imagine depending on when work from home orders start to be lifted or how social distancing may affect companies, maybe these programs may be extended beyond the end of this year. In addition, I just listed some state and local credits or relief programs, but I think the main thing is wherever you are in the US or internationally, check to see what opportunities you have out there. I have some listed here for California and New York because they're larger, more populated states. And so just in case this is helpful. And again, there's links in here so that you can click in and go to their website and read more. And in addition to the governments, some of the industries and businesses, larger businesses, have created programs that may create relief. And so some of them have to do with ad spend, et cetera. And so with all of those opportunities, it's important to really assess your overall situation. And James will go through that right now for all of you.
Hello again. So in a sense, yeah, in a sense, as we kind of, that was a lot of ground that was covered in terms of all sorts of opportunities that are there. But as we look to how to take some of these opportunities and to employ them in our individual situations, it helps to just start at a very high level and look at what are the various factors that are going to allow me to consider the overall situation in terms of the best way to move forward. And a couple of them that come to mind is there's a number of key factors, and in a sense, everyone's looking at a lot of information, but what's key is to really kind of try to cut through a lot of the information and noise out there to really understand what are the variables that are going to help determine the amount of time that we're going to get back to a new abnormal, I'll call it, for your situation. And the reason that's important is because, depending upon how long, we're going to be in this muck, are we going to be in it for 2 months? Are we going to be in it for 6 months, 2 years? It's going to make a lot of difference in terms of time. We're in this because it's going to be a key driver of your strategies. And the other thing is what may be affecting you company-wise won't necessarily be the same thing that's affecting your customers or clients. So you have to consider your own situation, but also relative to your clients. And so then you need to basically use that information to determine the right path forward. So another element of looking at your situation is really what mode are you in? Some companies are just hugely impacted. If you're a restaurant, or if you're in the travel business, or you're in the sports business, there was an immediate huge impact. You may be low on cash. You may have to just do a completely different strategy forward in terms of conserving cash and possibly making cuts and so forth. Opportunity companies are in, let's call, navigation mode. In other words, it's really tricky right now, but with the different aid options that are out there, they're able to find a way forward. They may be hurt in some ways, they may be helped in others, but they can find a way forward. And then there's others that, to some extent, it's opportunity time. If you're Amazon, this is while there's a lot of challenges, there's a lot of opportunities. And the other thing is sometimes they're a bit of both. So for example, physicians might find that they're not able to perform elective surgeries, but they're able to help out in other areas related to healthcare needs, for example. So ultimately, you want to assess, really think about it. What mode are you in? Recognizing, there's a lot of different contexts. We'll dig in a little deeper to look at opportunities that are there. So as you look to kind of consider the new abnormal, how long it's going to take to get there, and the mode you're in, we'll next move to address how to prepare to address for your situation. In short, it's critical to get a really strong handle on your company's finances ASAP, as well as your personal finances. You may need to completely reset your 2020 goals. If that's the case, don't beat yourself up emotionally. You just basically have to, adapt and keep moving forward. It's just part of life. We have big setbacks sometimes, and it's often really the resiliency that really separates people over the long run. So try to do what you can with the situation as best you can. And so one of the ways to begin doing that is gathering the key tools. And hopefully you have a robust financial ecosystem, because one way or another, your financial information is going to be really key. In other words, you're going to need detailed cost information to be able to formulate a plan forward. And that may be coming from, if you have QuickBooks or some other accounting system, it may be in your payroll system. You may have to go into the detail of even your credit card information. But ideally, for example, if your information is stored in the right fashion, you should be able to go into, for example, your QuickBooks Online account and see the information at a detailed level to understand, what your cost structure is. The other element that's really important is a pro forma cash model. Ideally, it will allow you to see months ahead in the future, so you're able to plan we build all sorts of different types of models for our clients. So I'll use this model as an example of a company that, for example, we have beginning cash here at the beginning to show what the beginning cash is. There's various revenue or income items shown minus various costs of sales items such as direct labor and supplies. Ideally, you're applying unit economics when you're building this out. In other words, the quantity sold times the price, for example, will be determining it rather than just putting numbers in and just kind of hoping the numbers are going to go up. Usually, in some of these tabs, like you'll see down below revenues, it will point to, there'll be a lot of detail in your revenue tab. There will also be information in your labor schedule that, a separate tab underneath that will show you all sorts of information. You'll compare budget to actual, but basically, it should be very informative and provide critical information like GPM you might see in the middle of the first column there, which is gross profit margin. So understanding how gross profit margin, as you go across over the months of January through December, you see, okay, in March, coronavirus hit, and all of a sudden it reduced sales by, from 250,000 to, 87,000. And so the cost stayed the same, and all of a sudden the gross profit margin is decreasing. And then if you go further down, if you look at some of the other factors, you're going to find that the net income is also impacted. And so the net margin is decreasing and so forth. And if you go down even further, you're going to find, for example, ending cash is starting to get depleted due to the cash getting burned away, so to speak, by having more expenses and expenditures than income. And so as you get out towards those last columns out there, and you'll notice that the cash is starting to go negative. So you may think, okay, what do I have to do to change this scenario, because I want to be able to last longer than maybe 8 more months? Is there something I can do? And so a model can be a really powerful way for you to start building to create a different scenario forward. And also, one last thing I draw your eye to is that other adjustments to cash, recognizing that in a sense, if you're starting with beginning cash, adding revenue, taking away expenses, there are other factors that affect cash. For example, if you get some of this government funding, that will be a factor that might come in April or May, and so you may have an addition there that increases your cash. There's a lot of other factors, but at a real high level, having a model that is updated to actual as you're moving along and is providing accurate information for your business is just a very, very powerful tool to allow you to plan for different scenarios. So in addition to having solid accounting ecosystem as well as having a cash model, it's also really critical to add a third item, which is knowing what your cash and financial levers are. So I'll be elaborating on the cash and financial levers in all of the next section. But before I kind of dig into the cash and financial levers, one thing to remember is when we were talking about the mode you're in, unless you're in pure survival mode, it isn't really just all about cutting expenses. It's really easy to think, oh, now things are bad economically, I instantly have to cut. But you got to understand what you're doing relative to your situation. You added these costs for a reason initially, and so you need to consider how the use of using these tools and changes of these expenditures will change and basically allow you to move forward and eventually emerge. And so starting with revenue and working to expenses, I'll be talking about a number of different factors that are involved. But also at a very high level, what you're trying to do, if you think about it, it's always as good to look at what our discretionary spending is. Are there things we can cut back on that won't really pinch at all initially, or is there credit card detail that can give us insight into that? So As we move into understanding what the key financial and cash levers are, one of the first places to look to is understanding what your customers and revenue are. How are your customers impacted by this new reality? Basically look at your customer base in detail. Can you segment them? Are some customers going to be impacted a lot, and perhaps others not so much? Another factor to consider, recognizing that everyone's situation is different. What kind of investor, bank, or other funding do you need to be thinking about? Sometimes, one of the things I haven't seen at all in this downturn, but I did in 2008, is companies that have lines of credit were finding that were having their lines of credit frozen. So, some companies, if they felt that was a risk, might want to consider taking out their entire line so that they're able to have that cash, even though they might have to pay a little bit more interest. You also may need to connect with funding sources and understand what's out there, and particularly there's all sorts of deferral options that are available. And then in terms of the sales pipeline, you also want to look at what sales are at risk. Is your pipeline slow, or is it freezing up? Look in detail at what you have booked and what might change over time. Are you able to count on the existing sales you already have booked? Are you able to book new sales in the current environment? Do you really need to change your whole sales and marketing plan? What if your sales was very dependent upon being on site? Are you going to be able to do it through web calls? Are you going to have to implement some other approach related to sales and marketing to deal with the new reality, at least for a while? Another factor is really look at your accounts receivable. One thing that can happen in an environment like this is companies start hoarding cash, and that may be those companies may be your customers. So do you continue to work with a company that's not paying you, even though you're incurring expenses on their behalf? And then also look at what adjustments are you able to make in your offerings to your clients? Are you able to offer different solutions that address the current situation? If someone's having difficulty, are you able to change the scope or accommodate what they're doing so you can find a win-win to allow them to keep moving forward while you're able to continue providing services? Perhaps you need to consider a lower scope offering that will meet new or even emerging needs, and really look at what new and emerging opportunities are out there. I'll give an example of marketing firms, for example, and some of them may have found that a lot of certain aspects of the marketing budget may freeze up, but there may be a lot of value in communicating to customers, to vendors and their team how they're responding to COVID and how their solutions are now relevant, or how they can meet needs in the current environment. And finally is also look at, if you have a supply chain in different ways. This could be the key employees, I guess, in some way, but it's generally the supplies that you're selling. You may need to look and determine if those are also secure. The other elements to look at, another big one, quite often the number 1, 2, and 3 expense for a company is payroll and labor costs, whether it's employees or contractors. So the different factors you have to consider here is, do you need to make adjustments in any way? And if so, what are the levers? Are you able to trim fat without cutting into the flesh and bone? Hopefully you're able to be, even if you have to make cuts, you can do it in a way that's compassionate to the employees on your team. So the various levers you can use, or salary and hour changes. For example, you could consider furloughs or layoffs. Furloughs being layoffs can also be temporary. You can do permanent layoffs. You can do sometimes temporary for a certain amount of time, or even just limiting the amount of hours that people are working. One thing to understand is there's some new flexibility in the health plan. So whereas some people used to be requiring, or some plans used to require, for example, full-time employment to to be able to offer benefits to the employee. The regs have changed, so you could have someone working, for example, 1 day a week and still get their health plan. It may not be what you want, but there may be some flexibility that helps make a situation better than nothing. There also, if you are stock option based, you may also consider increasing the option period for some of your employees. If you offer stock options to your employees, you could request your employees use PTO. You can always look at all your different benefits and look to make changes with your benefits, as well as, of course, you're going to, just like with employees, you're going to be looking at your contractors and really understanding, where's the value with the different contractors? Can you defer some of the services you need, if that makes sense in your situation? And also, with all of these, Maileen went into detail on some of the different programs. There's quite a few programs, but a lot of them can be used in conjunction with these payroll tools we're talking. So, for example, Family First Coronavirus Act, you could be helping at the front end if people need time off for coronavirus related reasons. You could be essentially paying your employees and getting reimbursed for that. And then you could still use some of these other tools that we mentioned. And even further down the road, you could also use the CARES Act to get a forgivable loan. So there's all sorts of combinations. There's also an employee tax credit that you can use further on down the road. So there's a lot of these. It's not an all or nothing. You just can't double dip as a rule of thumb. And then, one more thing I'd say about the employee retention credit, which I don't have mentioned here. Generally, you want to take the PPP loan credit first, but then you want to consider the employee credit, because the employee retention credit, because it's only about 40 to 60% of value of the PPP benefit. And then there's all sorts of other expense and cash levers you may want to consider. So if you want to look through all your different, services and SaaS solutions, consider them all a cost benefit. Can you defer them? You want to reassess all your insurance. With rent, you may reconsider your space needs. Do you sublet? Is it possible to renegotiate terms, or even in some cases, some companies have the option to defer payments in different ways. And in terms of loans and leases, you could possibly look to, lease something rather than buy, or, another item to consider, generally running with credit cards to finance a business is not a way to go, but if you can do a balance transfer of, say, 10, 20, 25,000, and you have zero interest for 12 months, it may buy some time. And then another key variable you can work with is deferring taxes. So you may have heard that you can push that the deadline for filing has moved from April 15th to July 15th as a rule of thumb, at least at the federal level. There's some variation at the state level, but one of the things you may not have known is that it's not only is the filing deadline pushed back, the need to pay taxes is also pushed back by 3 months. And that's related to your 29 income taxes, as well as your estimated taxes you may be paying for Q1 and Q2 of 2020, as well as your employer FICA payments. So what you can do with your employer FICA payments is you can defer 50% of them until December 31st of 2021, and the remaining 50% until December 31st of 2022. So in other words, your employer side of your FICA, which could be, let's just call that 7% of your payroll, it could be deferred into 2021 and 22. It can be a real number you're able to work with. So with that said, said on a lot of those different variables, I'll let Maileen take over and have her talk about the cash burn and cash runway.
Yeah, so, all of those levers that James went through are really critical when you're looking at how to manage your overall cash for your business. And so there is 2 elements that are really key to track: cash burn and cash runway. There is a pretty simple formula to do this if you don't have a sophisticated model to be able to visually see it. So the formula is you could take your available cash and you can also figure out what your net burn rate is. And so your net burn rate is all revenues coming in less all expenses for operations, and it's essentially your net income. But you take that and you divide your available cash by your net burn to get your runway. And so I have an example here so that you can see how this works. But some things that you need to know to calculate this are here so that you can reference back to it. And so as you can see, it gives you a number and kind of a relative sense of where you are. But this calculation, it works only so well if you're in a loss scenario or if you're an early stage company who has maybe some capital raised and so you don't have revenues and so you can actually see burn, because if you're in a profit situation, this doesn't really tell you very good information. Your number will essentially be negative. So if you're still in profit mode, or even if you're in a loss scenario, I really like using financial models, because these financial models are actually more amazing tools to allow you to visually see where your company is cash-wise. So I'm gonna just go through some of the elements here. James had mentioned a few pieces earlier, but when you're using your cash model, you can actually look at different scenarios, and I'll talk about scenario planning in a bit here, but you can create different models so you can see if I do plug in my PPP loan in April, what does that do to my cash? So if the company were able to apply for a 300K PPP loan, that's roughly what they would get based off of their average payroll here times 2.5 months. They would actually have positive cash here. So at the end of the year, they had 220,000 in negative cash. So if they had that PPP, that would help them extend their runway. And then if you see here in the model, I have different examples of burn rate. So gross burn is something that's interesting to know, because this is essentially all cash going out for operations. It doesn't consider revenue. And so if you wanted to know how long would my company last if I was burning at this rate with no revenue coming in, you could see the runway for that. And so based off of that information, it's roughly 3 to 4 months until you start getting down the road. And in this example, this company, we made the scenario as if they started the year out great, then COVID hit around roughly in March. They have some collections that were able to sustain through April, but by May, things were really dwindling down and it wasn't looking great. So another example here of burn rate is the net burn rates. I mentioned in my last slide that it's essentially revenue considered into this, but it's really for companies in a loss scenario. So for this company, they start hitting their loss scenario in May. So now we can use this calc to see that in May, they had roughly 5 months left to go. And so this is an indicator that helps the company understand that they really need to start scenario planning. So when you are doing scenario planning, you can actually build out and plan for different situations. And so it could be a situation where your company is raising capital. It could be a situation where you're going through growth and you want to look at growth plans. But today I'm going to look more at our COVID situation and look at a recovery response plan. So the key points here is you want to take your levers that James went through, your financial model, you want to assess your runway, and you want to build it into a dashboard as you go through and plan each phase. And so I have here 3 phases for a recovery response plan, but this is all up to you and your management team. Maybe you're going to have 5 phases, maybe it's only 2 phases, maybe it's just stabilize to emerge. But here I built it so that phase 1 is you're stabilizing. Your company has just gone through trauma. You're trying to find where your company is bleeding and you want to try to stabilize your company. And so that might be looking at your company as a whole to see who are essential employees, who can I keep on, and who do I unfortunately have to lay off or furlough. What programs can I utilize, whether it's PPP or FCRA, so all these employer payroll credits. How do I use those to stabilize? And then you say, you look to figure out what data points are going to signal your company to move into another stage. And so in phase 2, you may go into sustain, or maybe you realize that you have to actually move into survival mode. And then in phase 3, you can look to recovering and emerging. But the key point is to think of all the specific pieces that you're going to address when you move into these stages. And then also come to a definition of what your key data points will be that will signal your company to move into the next stage. And so dashboards are really, really useful tools when you're assessing signals to move into the next stage. So I have an example here of a dashboard that we build for companies, and it has a lot of great KPIs and metrics. You can really target in and see how they're progressing along. And they may be able to say that if I see that my sales target of 3 million, let's say this actual number was only hitting to a certain point. And so if it said it was only 1 million, and by a certain date it's not moving past that, then we know that the company has to either stay in stability stage, or if it hits 2 million, then they can move back to sustain. And so looking at your KPI dashboard to help you create signals to move into different stages. Another KPI that's really useful in here is tracking cash on hand. And so our dashboards that we build, they are created so that a company can look by date and see essentially as of the last week, where is my cash? And so this isn't cash in the bank, but it's cash with checks that have been written, or maybe deposits in transit that are considered here. Because the bank is, gives you a rough idea of what your cash is, but if you have a bunch of checks that are out there, your bank balance isn't going to tell you that until the check clears. So this, we have our dashboards linked to the actual accounting system so that we can really see actual cash levels. And then you may also want to review different things like AR turnover, and if the rates start to increase or decrease, or maybe if you work on projects and you want to be able to assess utilization of employees to see if you do have to lay off people or furlough people, who should be those employees that go into that mode first. So dashboards are really key tools to help your company identify when to move into another stage. So going back to the recovery plan, response plan that I have here, if I look at phase 3, this could be your recover and emerge stage. And so some important considerations when you're in this phase could be, looking to see that you emerge recession stronger. And this could be different definitions for different companies. It could be that you're looking to find new opportunities and emerge in a different way into a new market. Or maybe you don't have that luxury because maybe you have a lot of clients who have left or had to cancel. And so you can use the time still to improve operations and refine processes, or look at how you're servicing clients. In addition, another key consideration as you're looking at your phases is to really consider team productivity. Team productivity as we're moving to, or as we have been in these work from home environments, affects your revenue, and it affects how well your margins perform. And so, keep in mind safety should be a priority, but you should also look to ensure that your team has a functional setup and that they're professional, that things are configured, that you have security set up so that your data and information is secure and safe. But having clear expectations for your team, making sure that you have a way to plan and monitor performance as we're all working from home, or most of us are, is really key, because these really affect all of the levers. They affect your cash flow, they affect performance and productivity. And so it is truly a really important consideration. And so with that, James is going to, we presented a lot of information, so James is going to do a quick recap of all the different pieces that we covered today.
So we tried to cover a lot of ground. We probably could have extended this to 2 hours, but basically, one of the things I want to recap is really key points here. You know, basically everyone has a lot of challenges and opportunities, so recognize what they are. You know, you're never out of the fight. You know, keep moving forward. You know, despite the challenges you may have, and you know, look and understand what the opportunities are for assistance and support out there. You know, gather the key tools. You know, the financial model and so forth, and your financial information. And also look to know what your key financial and cash levers are, and then make a plan and put it, you know, in some detail in terms of how you're going to move forward, and then look forward to implement and move forward to lead forward with that plan. And so the other thing is just to recognize it's, you know, that's kind of the function of it, but it's a lot about our mindset also. It's you know, we have to recognize this, you know, if there was a situation, this is it, in terms of we don't have control over everything. We're, you know, but we really do have control over our actions. When this eventually clears, whether it's 2 months or, you know, a year from now, we want to be able to look back and feel we did the best we could during this period. And so, you know, in a sense, each of us having different, typically C-level roles in companies, have to recognize that this is really an important time for us to, you know, be decisive as leaders. On behalf of our company and our team and our employees, on behalf of our clients, some cases investors, as well as our families and ourselves. And so, you know, with that said, you know, we've covered a lot of ground. You know, we're glad to follow up afterwards with different questions. We'll leave a little time here for us, you know, but, you know, we generally work with innovation companies, and, you know, in the roughly 1 to 30 million or 5 to 100 employees, you know, typically companies that are looking to scale up fairly quickly in a few different sectors, tech and innovation-based businesses, creative and service-based business, as well as government contracting. And so while those are some of the sectors we work in, you know, you're welcome, even if you're not in that sector afterwards, to follow up with questions. We'll try to answer to the extent we can if, you know, if we're not able to answer in the Q&A period here. And then, you know, the other thing is, you know, if it helps to reach out, there's certainly no should, obviously, but there's a variety of realms. I won't go into these in detail, but, you know, generally everything in the accounting and business operations realm is, you know, what we deal with, from, you know, core accounting and finance through fractional CFO, tax and tax planning. So with that said, we are glad to open it up for some questions and really encourage you to speak out. I mean, I think a lot of people, there was a lot to consider during this period. Really encourage everyone to reach out with any questions you have, whether it's right now or after the presentation. So fire away.
Great. Thank you so much for that wonderful presentation. There was a lot of wonderful and helpful information in there. We did get a couple of questions that came through. The first person asks, I did not make the PPP loan cutoff. What should I do now?
This is a really, really common issue. And so we have a great deal of experience with this from you know, having observation of about 40 different companies in terms of what's going on. So here's the overall situation. Generally, the national banks are really doing a pretty poor job of this in terms of getting their companies funded. We've seen a huge pattern of companies that are applying with credit unions and local, you know, community banks, as well as some regional banks, giving a lot more attention and being a lot more successful getting their clients funding. So one of the things I'd recommend is, you know, if there's any feedback that comes with, you know, good chance you're not even hearing, or you're getting some vague notion that you're in the system, you know, I would look to apply to another credit union or another bank. You know, you could even look at two. The thing to consider is you cannot take duplicate funds but we're not aware of anything that keeps you from applying at another organization, just like it's very common to apply for more than one loan. You just want to make sure you're really clear you don't accept any, duplicate funds. And so, some might advise against that, but, if an organization have 3 weeks and 2 or 3 weeks and you don't see any progress, I wouldn't just trust that they're going to get it done.
Yeah, I would agree with that, especially if you have your first application in with maybe a larger bank and you haven't heard anything. We have had some clients who received emails from the big banks saying, reapply for the second round. And so be really leery and hesitant and really understand if that's the right choice and see what local regional banks you can go to. And I would try to call as many as you can if that's what it takes. But when you're calling different banks, ask questions like, what was their success in round one? I have heard of banks who have had 100% funding rates in round one, some with 80%. And if you look at the large national banks, I would be really surprised to hear, I'm just throwing a number out there, but if they had more than 50%, I'd be surprised. But I don't know if that's the right number. I'm just throwing a guess out there based off of what I've seen.
Yeah, so we've been involved with quite a few companies that didn't get funding from the national banks, and we had advised them to consider other banks and have had just loads of success with that route. So hopefully that that tip works in your situation.
Mm-hmm.
And also consider the EIDL program, which can give you $10,000 up to $10,000 of forgivable cash, through an emergency loan.
Yes. Oh, and one other thing too is, as you're seeking out new banks to apply your next PPP loan, know that you're going to be expected to likely move your operating account for your business to this new bank. So make sure it's a good overall fit. Banks are not looking for a one-time loan, but they're looking for a long-term relationship because the reality is they're helping their current customers and they have a lot of people coming to ask for help, and so they want to help more companies that are willing to move their long-term relationship. So I would be prepared for that.
Yeah, and we expect the second round. I expect it within a week to be the second round of funding to be used up, because the process is there and there are a lot of apps that are already loaded, ready to go when it opens. So we're really hoping there's a third round of funding, because I think a lot of people are going to get left behind by this at this point. So.
Perfect. We have another question that came in. This person asks, how can I obtain forgiveness of my PPP loan proceeds?
Great question. Do you want to?
Yeah, I'll take that. So the forgiveness, the overall, it's in the 8-week period once you receive loan funding. And so forgiveness is based off of using the loan proceeds on specific expenses. So you need to use at least 75% on payroll costs, and then up to 25% on interest on mortgage, rent, and utilities. So something that you want to consider, though, is when you receive the funding of your loan, you may want to consider if you should receive it immediately, or you can actually, I read somewhere you can actually defer it up to 90 days. And so a reason why you might want to do that is, let's say you laid off or furloughed part of your team, and one of the requirements for forgiveness is to keep your employment levels at the same level as when you applied, or for the last 12 months. And so if you need time to rehire your employees, and I believe you have till June 30th to rehire your employees, you may want to defer the timing of when you actually receive your funding. But the funding, the loan forgiveness is something that you'll go back to the bank where you applied for and receive the fundings from, and they will have usually some guidelines on how they're going to submit your request for forgiveness. And so our thoughts right now is likely they're going to request records like payroll documents. Maybe they'll have their own Excel schedule, but there's no specific guidelines out yet. And I think as far as what the banks are going to review, But I think this week and over the next couple of weeks, Treasury and other government agencies will likely come out with guidance on what the banks should be looking at to request or to provide the forgiveness.
Yeah, to add to that, in a sense, it's not an all or nothing in terms of forgiveness. So there's three different factors that could cut into your ability to get full funding. One is decreasing your employee headcount. The other is reducing salaries per employee. If their salaries drop, I think it's 20 or 20, I think it's 25% compared to the most recent quarter. And then another factor is if you aren't using 75% on payroll versus non-payroll, that's another factor. So anyway, it makes a lot of sense as soon as you do get your funding to pay a lot of attention to how you're going to get forgiveness of that funding.
Wonderful. I think we have time for one more question. This person asks, I have an existing SBA loan. Can I request the EIDL to refinance my existing SBA loan, given the EIDL has a lower rate?
Great question. Well, first of all, one of the things to understand is that you can request that, because if you get the loan, but there's another program we didn't hit very hard on is if you have an SBA loan, what the SBA is doing is they're paying 6 months of principal and interest on most of the loans that are out there. And so that's not just deferring at 6 months, they're actually paying 6 months of 7A loans, SBA Express loans, the Express Bridge loans, and also other types of 7A loans. So that may be a great angle right there. And then in terms of restructuring, there also are restructuring options available also through the SBA. That gets a little more involved, but basically there's a lot of options. And then you can also, yes, you could also look to replace it. But generally we're not seeing, at least right now, a lot of the EIDL loans going out more than the emergency funding amount. And so we're seeing those go out quite a bit, but we're not seeing a lot above it. The program was funded, we'll call it first round as well as the second round, but I think the funding is going to be pretty small relative to the amount of loans out there. So I think most of it's going to go to, or a lot of it is going to go to just the emergency funding that is forgivable.
Wonderful. Thank you again so much, you two. That was, like I said, some fantastic information. We even got a lot of people that didn't ask questions, but a couple of them said fantastic information, well presented.
All right.
They're very happy with it.
Yeah, well, I encourage everyone. I really, glad to hear that. Really, if you need some assistance on something, reach out and we'll do what we can. We'll be sending the slide deck afterwards. So, and really wish everyone the best with their individual situation, because I know it's just really, really tough, a lot of situations. So hang tough with it all.
Perfect. Yes.
Definitely.
Like James said, this afternoon, I'm going to be sending everybody that not only attended, but registered for today's webinar, a copy of the slide deck and a copy of the recording. If there are any questions for either James or Maileen, you will have the slide deck with their information. Please feel free to contact them. Again, everybody, thank you so much for joining us today. I hope everybody has a wonderful rest of their day.
Thank you.